Hello everyone, welcome to Bald Guy Money. I am Bald Guy, and 2 weeks ago I shared some analysis with you all on the history of the gold price and how it has reacted to banking crises, and you can see what I shared with respect to that here on the screen, showing strong gold performance when banks fail. In that same video, I also shared this: gold performance if you purchased 1 ounce of gold every year for the last 15 years at the average annual price versus the highest annual price versus the lowest annual price in nominal terms, as well as how those purchases have performed adjusted to inflation. And remember, that showed us that despite the fact gold takes some criticism from people who don't fully understand it, it has done its job perfectly, not only as a store of wealth, but also as a hedge against inflation. Now, many of you requested that I do the same video for silver. You can see some of the comments on the screen here, so thank you to everyone who shared your requests in the comments section. I promise to always make this channel about you and deliver the content that you want to see. And this couldn't have come at a better time, really, because silver had an incredible week. We finally seen the price break above the key resistance level of $30 per troy ounce. And if it can stay above there by the end of next week, we will have confirmation of the silver breakout I had been promising you all back when I said this right here on YouTube on December 3rd, 2023. We can confidently say that we are looking at a period of 2 to 14 months before silver catches up to the current trend in gold. And I am inclined to say that will likely be the first half of 2024, which is in line with predictions I have been making on silver since 2022, for those of you who have been following me since then. And I really believe that this is going to happen as inflation starts to ripple through the market once again, as I alluded to earlier, 4 to 6 months from now. So, now that we've set the table, I want to dig deeper into silver performance, starting with how silver has historically performed in times of banking crises, just as we did for gold. Then I want to show you all a comparison of how gold and silver have performed versus the 2011 blow-off top on metals, because there are some interesting things to be learned from that analysis that gives us clues as to where the price of silver may be headed over the next 12 to 24 months. And just before we get to this video's viewer question, I want to share some insights with you all as to how I buy silver based on the same 15-year analysis that we did for gold to answer the question: is it too late to buy silver now? Just before we get into it, if you're in the United States and want to buy gold or silver at a great price from a dealer that you can trust, please check out channel partner Pimbex at pimbex.com to see the amazing assortment of metals they offer. What you see here on the screen is just a small sample of what they have, and if you're trying to get ahead of the latest price breakout, I am sure you will be satisfied with Pimbex. And for those of you who want to get some gold and silver in your IRA, even if it's just a little bit, they can help. Call them for a free consultation at the number on the screen to find out how. Just please tell them you came from the Bald Guy Money channel. Okay, so let's get into this again, starting with the analysis of silver performance during banking and financial crises. And we're going to look at the 4 distinct periods we looked at for gold, going back to the mid-1980s to better understand the relationship of silver price to bank failures. And just to be clear on methodology, I'll repeat this, what I said in that video 2 weeks ago. I take silver's starting price point from the year before the crisis started to provide a fair baseline price for silver moving into the crisis. This is the exact same methodology I used for gold. And the first 2 periods we're looking at are associated with the US savings and loan crisis, with the first period going from 1986 to 1989, at which point the US government set up a corporation to manage the crisis, and we entered the second leg of failures, which lasted until 1995. Now, as you can see on the chart here, silver started at $6.25 per troy ounce in 1985, and unlike gold, which went up during this crisis, the price of silver actually declined by 12% in the period from 1985 to 1989 and 17% from 1985 all the way to 1995 at the official end of the crisis. And silver didn't really break above that 1985 price level and hold it until July 2004, nearly 20 years later, when a lot of things started to change for silver. Because in the early 2000s, both silver and gold got ETFs, exchange traded funds, and they made it easier for investment and pension funds to gain exposure to precious metals without the hassle of having to store it. Now, I don't want this to become a debate on the merits of precious metals ETFs, or if you don't hold it, you don't own it. That's not what this is about. The fact is, this reduced a lot of the barriers that had existed for institutional investors to move money in and out of safe havens like gold and silver. And as a result, from 2006, a year before the global financial crisis kicked off, until the end of 2010 when the European sovereign debt crisis happened, the price of silver increased from $9.04 per troy ounce all the way up to $30.93 per troy ounce, so not far from where we are today, and that was a gain of 242%. This was also accelerated by massive growth in the industrial use of silver for electronic devices like iPhones and smart TVs, which has kept pressure on the supply of silver till today. And as a side note, that's resulted in supply deficits over the past 5 years, with another one expected to happen this year, making that 6 years in a row. Now, of course, after the 2011 blow-off top, we did see a pullback in the price of silver, and we will cover that a bit more shortly. But the fact remains that the lowest price we've seen on silver since then was during the C19 panic crash, when spot silver reached $11.77 per troy ounce, which was still 30% above the 2006 starting price. And in all fairness, buying physical silver for or around $11.77 per troy ounce right before it shot up to nearly $30 in 2020 wasn't something that was really possible, so please take that data point with a huge grain of salt. Now, moving on to the final crisis marked here on the chart, we started 2022 at $22.81 an ounce for silver. And just like gold, once U.S. interest rates started going up when the Federal Reserve kicked off its battle against inflation, which came way too late, the price of silver pulled back all the way to $17.83 per troy ounce. But as we did with gold in that video 2 weeks ago, we will stick to the $22.81 level as our starting point here, a price that we moved above in 2023 as the banking issues started to unfold in March of last year. Due to the higher interest rates the Federal Reserve was implementing on the market, but moving all the way to today, as pressure on banks remains elevated, we find ourselves up 38% versus that 2022 opening price, meaning that silver, despite a very poor performance during the savings and loan crisis of the 80s and 90s, has outperformed gold in the last two periods of financial crisis. And say what you want about that, but the numbers don't lie. And it reminds me of something I said this past Friday in my Patreon Discord group, where a member asked if I thought the price of silver would correct. And I said to him, the price of silver is correcting, because considering the supply deficits and growing investment interest in silver, the price of silver should probably still be much higher versus where it is today, even though many of us have difficulty believing it because of how volatile the price action on silver has been, especially around this $30 per ounce level. Now, does that mean I'm running out and spending all of my cash on physical silver right now? No, it doesn't mean that. And we will get more into that shortly. But realistically, I'd like to see how markets open up on Monday and how they close next Friday before claiming this is a confirmed breakout, because I have been systematically buying a lot of the dips on silver over the past 8 or 9 years. So I don't feel the need to chase price right now. Can I see myself buying $30 silver sometime in the future? Absolutely, yes, I can see it. But once again, I want to see confirmation that we will hold this level before jumping in. Because if we look at price performance of gold and silver in 2024 versus 2011, you can see that gold's breakout is fully confirmed. We are above the 2011 blow-off top price levels when it comes to each and every metric, including opening price for the year, low price for the year, and even high price for the year. But if we look at silver, you can see that we're still underperforming versus those 2011 numbers. And that tells me two things. The first is, if this breakout confirms, we have a lot of running to do on the price of silver, just like we saw in the period between 2006 and 2010. And that's a great thing for people like me who have been bullish on silver. But, and this is the second point, it also means I have the luxury to wait another week for confirmation of the breakout. Confirmation that the market accepts silver above $30 per ounce. Because even if I miss out on another $1 per ounce move to the upside, it won't make much of a difference for me over the long run, especially considering how much silver I already have stacked. I have a little bit on the table here today. So I hope that logic makes sense for everybody, because I've come on here before to give you buy signals. I've given a couple recently, one for gold and one for silver, but I also think it's fair to share information on when I'm just holding tight and why I'm waiting. So as I pull up the nominal 15-year performance for silver, and remember, this is not inflation adjusted, I will show that in a moment, I want you all to remember that due to silver's volatility, it is more important to pick your entry points wisely than it is with gold. Yes, it's true that all price points, including buying the highest price of silver every year, give you a nominally positive return. You can see the numbers right here on the screen. But look at how large the difference between buying the low price each year is versus buying the high price each year. Buying the low price of silver each year has given a 77% return over the past 15 years. But if we look at what you would have gotten as a return from buying the high price on silver every year for the last 15 years, you can see that the return is only 15% nominally. And that is well below what you would have gotten if you had purchased the high price on gold every year, which has yielded a 41% return considering today's price over the same period of time. Now, as I switch over to the inflation-adjusted numbers, I will remind you all that I expect to see $60 silver by 2026. I said that in 2022, and I stick by that price prediction. And who knows, we may even go far beyond $60 per ounce by then. As a silver stacker, I welcome the possibility, but I'm not going to come on here and overpromise anything. Looking at the numbers that I've looked at, I think $60 per ounce is a reasonable target. Now, I'll take this moment to answer the main question of the video, which was, is it too late to buy silver now after this recent price pump? The answer is absolutely not. I'm not coming on here to tell you don't buy silver anymore, that it's too late. The message of this video is, just be smart about how you buy silver. Like I said with gold, being on a schedule is really best, because at today's prices, you can see that buying the average price of silver over the past 15 years means you have beaten inflation. And yes, I understand these numbers do not include premiums, but assuming your average premium is around 10% on silver, you would still have beaten inflation by about 5%. And considering where I think we're going, those numbers are about to get a lot sweeter, but it's likely going to take us a couple more years to get there. Remember, the big 254% pump between 2006 and 2010 that we saw on silver, that took 5 years to materialize, and there were pullbacks along the way. Now, I can't tell you what to do or how to spend your money, but I can tell you what I do and what I am doing. And what I am doing is focusing on buying those pullbacks versus chasing the pumps, because doing it that way has gotten me more metal for my money over a long period of time. And every one of my Patreon members who has seen my buy alerts over the past year and a half know that's true. And they've benefited from that strategy. And just before we get into this video's viewer question, I will remind you all that you can join my Patreon to support me and at the same time get extra video content, access to my weekly newsletter, as well as all of my price targets and buy signals. I will also be adding this 15-year silver analysis file to the Patreon for all members after this video. So if you want to join, the link to do so is in the video description and pinned comment below. And now to this video's viewer question, and it comes from a viewer who calls himself or herself the Big Exclusive. I like that name, the Big Exclusive. And it was left under one of my older videos, so that is proof that I read all the comments, even new comments under my older videos. So don't be afraid to leave your questions in any of my videos, even if you're watching an older one. It doesn't have to be the latest one for me to feature it here on the channel. But the Big Exclusive asked, what are the odds the US will return to the gold standard? And I think that's a great question because a lot of people have been asking me this question, and it's something that I even, let's say, loosely touched on with Peter Schiff in last week's video. And what I have to say about that is the odds are basically zero, at least not the USA in its current form. And the reason for that is because the US dollar is the reserve currency of the world. Whether we like it or not, it still is. And that means the world is on a de facto US dollar standard. And that is convenient for the United States because they can just print those dollars. It's a lot easier than mining gold and being responsible with spending your money and trying to match your expenditures with whatever you're taking in tax revenue. And for that reason, I think the odds of a US return to the gold standard are exactly zero. So thank you very much to the Big Exclusive for that question. It was a great question, and I hope my answer helped. With that said, that's it for this video. I want to once again thank you all for helping this channel grow. Your likes, your comments, and the fact that many of you are sharing this content with people and on other platforms is really helpful to me, helping get my message out to people, and I'm super grateful for you all. And until the next time we see each other, everybody, take care of yourselves and take care of each other. Goodbye.